Now I invite Dr. Rohit. He'll be speaking on insurance, term and health insurance. Again, an important topic. Nobody tells us about them. If we ask anybody, there are selfish gains involved for them. So let's hear him talk on it.
Good afternoon, everyone. So after so much of wealth making, I'll come to the expense part. So insurance, some consider it as asset, but at Welcon we are taught that it is an expense. We should not mix our investment with our expense. So a disclaimer, I am not an insurance agent or a financial expert. This discussion is purely for educational purpose. First of all, I would like to thank Dr. Ramnath Gutev for being our mentor, and he the founder of Welcon, and he has made around more than 80,000 doctors to learn finance. So coming to a topic, life insurance, there are of two types. One is with investment and other is without investments. So I would like to say that do not mix your investment plan with your insurance plan. So insurance, keep it as an expenditure, it's an expense. So without investment, that is a term policy, term life insurance, and with investment, we have the ULIP, endowment plans, and money back plans. So what is a term policy? Term policy is a pure risk cover. It will cover the risk of your life. And what is an endowment? Along with the risk cover, it will have some saving, that is you will get some money back. And there are non-linked participating endowment policy, which is insurance cover plus survival benefits, and that survival benefit is linked to the profit of the life insurance company. Then there are ULIPs. ULIPs are insurance cover plus market linked investment benefits. And last is non-participating, non-linked endowment plans, that is the fixed amount known beforehand of the risk cover, that is what the family gets, and the survival benefits what you get. So what is the problem with LIC? Why at all our talks we are saying to not take LIC, LIC is not good. So only as a term policy, LIC is very good, you can go for it. But if you mix your investment with LIC, the problem is that most of the policies are 20 to 25 years long. So where the investment returns are very low. So if you go on calculate it comes around 4% CAGR, and XIR are mostly less than 5.5, which is less than the FD or your saving interest, bank saving interest. So, and as per the term policy cover is also very low. So it will not give you a good term policy cover, and not a very good tool for investment returns. So it doesn't serve either the purpose. So at Welcon we call them as ignorance policies, and we recommend to stop LIC or redeem LIC if done for investment. So what we recommend is the term insurance, which is that the death benefit to a family for a certain period, financial protection to dependent family in case of untimely demise of an earning member. Over here the premiums are fixed, so and you should start early in life because it will be less expensive. So you can cut your expense if you start early in life. How to choose a best term plan? So the best term plan should be at least around 20 times of your annual expense plus loan amount, or at least 10 to 15 times of your annual income. So if your annual income is around 50 lakhs, so it should be something around 5 CR. Because some insured cannot be increased, so some also go for life stage protection option. That is, at the time of your marriage or childbirth, you can increase the sum insured. Insurance should be taken up till the age of 70 years. This is something very personal, but I feel after 70 years, you go into your phase of retirement and your child are no longer dependent. So till 70 years of life, it is okay. Premium payment till end of policy. There should not be any limited pay, or if I pay the policy in 10 years, so there is no benefit of such things. Buy from top companies, LIC, HDFC, SBI, ICICI, anyone. Don't go for research. Don't waste your time on such thing. You waste your time on investment, but not on expenditure. You can buy from any of the top 4 good insurance companies where they have the good claim settlement ratio, surplus solvency ratios of more than 1.5. And this is very important. Fill your form yourself, disclose all the medical history, ask for medical tests. They include terminal illness waiver, include disability waiver. Read the small fine prints very carefully. There are certain things you should know, that they have the right to deny, that is suicide in first year of policy, or any wrong information given while buying the policy. And there are certain exclusions, such as death in case of high risky activities such as skydiving or car racing. In those cases, your term insurance will not give you the money. What are the companies' rule if you miss a premium or when you surrender the policy? This should also be looked into. Then there are free lock-in period. Most companies have a free lock-in period for 15 days from date of issue. And there is something called MWPA. You should always opt for MWPA. So what is MWPA? It is basically Married Women's Protection Act. According to this, the insured amount can be claimed by the whatever the insured amount you are getting on the debt. It can be claimed by the creditors of the husband for the home loan, or can be attached in court if dispute is there with other family members with respect to claim amount received. So as per the act, they cannot claim it. It is just your wife and your children's property, and this cannot be changed. Even if you divorce your wife, you cannot change it. Okay, so we can add retrospective. One thing is important, this has to be taken while you go for the policy. You cannot add this retrospectively in the existing policy. Now coming to second part of my talk, health insurance. There are various kinds of health insurance. So let us discuss difference between the individual and family floater. So individual health policy is that each family member has a separate cover, which can be continued once children becomes major or married or relocated, and the no claim bonus is not lost. Disadvantage is that it has more premium. Most of us go for family floater policy, but the disadvantage is that it is one policy which covers all the members of the family, and the premium is based on the age of senior person, and it will increase when the person grows more than 50 years. So if any illness affecting multiple family members together, such as an accident, the claim coverage may not be sufficient. A single member can consume the entire policy in a year. In such cases, the rest of the family members remain uninsured for the entire year. So we recommend to go for individual health insurance, and along with that, we should go for something called a super top-up plan. So what is the super top-up plan? So there is a difference between a top-up and a super top-up. So if you, for example, if you are taking a health policy of 5 lakhs, so in a year you got hospitalized and your bill is more than 5 lakhs, say 7 lakhs. So in such case, your 5 lakhs will be consumed by your base policy, and then your super top-up will kick, where the deductible amount exceeded in all the hospital bills can be claimed, and there can be multiple claims made in a year. The difference with the top-up is that in top-up only one hospital bill can be claimed in a single year. Okay, so we recommend to go for super top-up. So while buying the policy, there are certain points, key points to remember, that you should keep your premium low. Do not overbuy it, it's an expense. Keep the adequate sum insured around 20 to 30 lakhs per individual. Best will be a base policy of 10 lakhs with a super top-up of 50 lakhs to 1 crore. Study terms and conditions. Your health insurance should be having a cashless facility in the hospital network of more than 8,000 in your locality, and it should cover for the pre-existing disease. Always disclose the PEDs. It's very important. Most of us hide that we are diabetic, we are hypertensive, but we have to give more premium, so they will not disclose it. But these are the common reasons where you will get rejected. Opt for something having a house claim settlement rather than a TPA. Pre and post hospitalization coverage 30 days before and 60 to 90 days after should be covered. Daycare treatment coverage, consumables, deductibles, and avoid health insurance policies which are having capping on room rent and surgical limits, such as the GIPSA companies. Avoid the health insurance where you have to give co-payments. Better to go for private companies such as Bajaj Alliance, HDFC Ergo, ICICI Lombard, Max Bupa. In Welcome, we call them the BHIM companies. Last but not the least, critical illness plan is very important after 40 years of age. where you are given a sum assured at the diagnosis, no need for hospitalization for critical illness such as heart attack, stroke, paralysis, kidney failure, and major operations such as CABG or organ transplantation. Thank you. Just in the end, I would like to say insurance is an expense. Insurance and investment should not be mixed. Thank you.